You're replaceable, don't forget that. He said it calmly, like he was reminding me where I stood. I'm Kathleen. I'm 32, and I work in financial risk management, where every dollar has weight and every commitment has a cost. For years, I covered my family's bills without hesitation: rent, insurance, phones, emergencies. I thought I was helping. But the moment my father called me replaceable, something shifted. Because if I was just an account to withdraw from, then maybe it was time to review the balance. And this didn't start overnight. It started the way these things usually do, with something that sounded temporary. Dad had lost the job he'd held for over 20 years. One company. 2 decades. The kind of position that becomes part of your identity. He told me it was just a setback. The market was unfair. Employers didn't value experience anymore. He only needed a little time to reset, and I believed him. I didn't hesitate when he asked for help, covering a few bills. It felt logical, responsible even. If I had the income and he was in transition, why wouldn't I step in? That's what families do, right? At first, the requests were specific. A utility payment here, a car installment there. He said he was applying for jobs. He said interviews were coming. He said it would stabilize soon. But the updates about interviews slowly disappeared. The conversations changed tone. Instead of, I just need a few weeks, it became, you understand how unfair this market is. Instead of timelines, there were explanations. Instead of plans, there were reasons. And every reason ended with the same quiet conclusion: I would handle it. The temporary support never expired. It just expanded. Mom entered the picture differently. She didn't talk about the job market or discrimination. She talked about love. She said money shouldn't matter between parents and children. She said focusing on numbers made me cold. That compassion meant not keeping score. Whenever I mentioned my own budget, my rent, my savings goals, my future, she would tilt her head slightly and ask why I cared so much about money when family needed me. She framed limits as selfishness, as if drawing a line was the same thing as abandoning them. And here's the part that confused me for a long time. She hadn't paid a household bill in years. Not because she couldn't, but because she believed she shouldn't have to. In her mind, a daughter with a salary automatically becomes a resource. Not occasionally, permanently. If I questioned anything, she would say, "We sacrifice for you," or "A good daughter doesn't calculate." It wasn't an argument about finances. It was a moral evaluation. Then there was Kyle. My younger brother didn't ask with speeches about sacrifice. He used softer language: teamwork, unity, shared resources. He convinced me to add him to insurance policies because it was cheaper as a group. He said adulthood didn't erase collective responsibility. When I suggested he transfer something into his own name, he laughed and asked if I was trying to act like a landlord. A landlord. That word stayed with me because I wasn't charging anyone rent. I wasn't earning anything from these arrangements. I was just absorbing the cost. But in his mind, asking him to take ownership of his own expenses was oppressive, cold, transactional. The pattern became clear, but slowly, almost invisibly. Dad framed financial support as repayment for raising me. Mom framed it as love. Kyle framed it as solidarity. Different language, same results. None of them asked what the long-term structure looked like. None of them proposed a deadline. None of them sat down with me and said, "Here's our plan to get back on our feet." They just assumed I would remain the solution, and appreciation faded. That might have been the most unsettling shift of all. At first, there were thank yous, gratitude, a sense of partnership. But as the months stretched on, support became expected, then normalized, then demanded. Dad stopped acknowledging that my career required effort. He would say my generation had it easy, that opportunities just appeared for people like me, as if my job existed without late night certifications or pressure. Mom treated my financial reviews like arrogance. She would sigh when I opened spreadsheets. Not everything is about numbers, she'd say while benefiting from every number. Kyle described responsibility as greed. If I hesitated before paying something, he'd ask why I was being dramatic, as if stability was an overreaction. I realized I had stepped into a role no one formally assigned, but everyone relied on. I was the emergency fund, the guarantor, the buffer between their choices and the consequences of those choices. And here's what made it complicated. Biologically, emotionally, culturally, there's a narrative that says children owe their parents indefinitely, that siblings should sacrifice for each other, that love proves itself through financial endurance. They leaned on that narrative heavily. Whenever I felt uneasy, they didn't address the logistics. They addressed my character. Was I loyal enough, grateful enough, compassionate enough? The conversation was never about whether the arrangement was sustainable. It was about whether I was good. Over time, I stopped being a daughter or a sister in financial discussions. I became infrastructure, a system, a source. If a bill appeared, it was mine. If a late notice arrived, I handled it. If someone felt stressed, I transferred money. And no one not once asked what that cost me. Not emotionally, not professionally, not personally. The help that was supposed to bridge a gap became the foundation of their lifestyle. And the more I provided, the less visible my effort became. Support turned into duty. Duty turned into entitlement. So when my father leaned forward during that argument and told me I was replaceable, I think what shocked me wasn't the insult, it was the clarity. Because somewhere along the way I had stopped being Kathleen. I had become an account. When my father said you're replaceable, something in me went quiet. Not angry, not dramatic, quiet. I didn't argue. I didn't defend myself. I just went home and sat at my kitchen table the next morning with my laptop open and my banking app pulled up. If I was replaceable, then I needed to understand exactly what that meant in numbers. In my field, financial risk management, you don't react emotionally to exposure. You measure it. You identify liabilities. You correct misalignment. So that's what I did. I took a personal day from work. No announcement, no speech, just time. First, I opened a full overview of every account under my name. Automatic withdrawals, authorized users, recurring subscriptions, insurance policies, lease agreements, anything legally tied to me. It felt strange at first reviewing my own family the way I would review a client portfolio. But clarity has a structure, and I needed structure. I started with the credit cards. My parents each had cards with their names embossed on them. Kyle had a supplementary card too. I had added him years ago because he convinced me it was simpler to share a plan. At the time, it felt harmless, practical. I logged into the card management page and looked at the spending history. Groceries, gas, online orders, recurring charges I didn't even recognize anymore. There's a feature most people ignore on those apps: manage authorized users. It only took 2 clicks to remove each name. No warning notification went to them. The system only alerts the primary account holder. I didn't hesitate. I didn't narrate it to myself. I just clicked. Remove, confirm, remove, confirm. Then I locked the physical cards tied to those users. The interface turned gray beside their names. Access revoked. It astonished me how quickly long-standing dependency could be undone. Years of assumption dissolved in under 5 minutes. Next was the joint checking account. I had opened it for emergencies, but every deposit in that account came from me, and withdrawals appeared whenever someone felt inconvenience or pressure. I transferred the entire balance back into my personal account. I left the joint account active, but empty. The bank required a minimum process to close it formally, and I didn't want a symbolic confrontation. I wanted clean documentation. After that, I opened a new personal account with 2-factor authentication, fresh credentials, no shared passwords, no access points that looped back to old arrangements. Then I moved to the phone plan. The family plan was under my name, 4 lines, discounted bundle pricing. It looked economical on paper. It wasn't. I called customer service and requested a full separation of the additional lines. The representative explained that each removed number would need its own contract credit check and standard market rate. I approved the change and paid the final billing cycle in advance. It wasn't punishment. It was standard procedure for adults managing their own accounts. Auto insurance came next. The policy covered my car, Dad's truck, Mom's compact car, and Kyle's sedan. I had agreed to it originally because bundling reduced the premium. But the discount only made sense when risk was shared responsibly. That was no longer true. I asked the insurer to remove every vehicle except mine. The representative warned me that my premium would increase once the multi-car discount disappeared. I accepted that. The financial logic for keeping them attached to my policy no longer existed. PDF confirmations landed in my inbox minutes later. Health insurance required more paperwork. My parents were eligible for subsidized programs based on their income. Kyle had access to employer-sponsored coverage but had delayed enrolling. I contacted the provider and requested termination of dependent coverage. The representative explained enrollment windows and state exchange options. I submitted the necessary removal forms electronically and scheduled a verification call. It felt less like cutting people off and more like closing compliance gaps. By midday, I paused and reviewed the list. Credit cards adjusted, joint funds separated, phone lines dismantled, auto insurance revised, health coverage terminated. I reopened my laptop one more time and audited subscriptions, streaming services, delivery memberships, cloud storage plans. Anything linked to my billing information that didn't directly serve me was canceled. I made sure each cancellation generated a receipt. I didn't draft a message. I didn't rehearse a speech. A declined transaction would communicate more clearly than an argument ever could. Finally, I looked at the apartment lease. I was the guarantor for the 1-bedroom they occupied. The contract listed me as financially responsible if they defaulted. I scheduled an appointment with the leasing office to understand the protocol for early termination and liability adjustments. Documentation over discussion. Process over emotion. By the time I closed my laptop, the financial structure had changed. Not explosively, administratively. I didn't feel triumphant. I didn't feel cruel. I felt aligned. If I was replaceable, then so were the benefits attached to my name. And for the first time in years, every account under it belonged to me. 2 days later, the system began speaking for me. I was at my desk reviewing a quarterly risk report when my phone buzzed. A missed call from my mother. She never called during business hours. She preferred texts short, indirect, carefully phrased. The voicemail notification appeared a minute later. I let it sit before pressing play. Her voice sounded tight, controlled, but strained. "Kathleen, I think your card company is having some kind of error. I'm at the supermarket and it's declining. The cashier keeps trying. Can you call them?" "Not." "Can you explain?" "Not." Did something change? An error. I stared at my screen for a moment before replying with a single sentence. "The card is inactive." The typing bubbles appeared immediately, disappeared, reappeared. "What do you mean inactive groceries are basic needs? I'm at checkout." There it was. The word needs. As if my name was printed next to the definition. I didn't debate it. I didn't escalate. I wrote, "You'll need to use your own debit card. When an account holder removes access, transactions decline." The bubbles lingered longer this time. "So you expect me to carry cash now," she wrote. "This is embarrassing." Embarrassing. I read that word twice. The embarrassment wasn't about hunger. It wasn't about inability. It was about visibility. A decline screen in public. "I expect you to use your own funds," I replied. "That's normal." The bubbles disappeared. That afternoon, Kyle texted, "Hey, my card got rejected at the gas station. I'm literally at the pump. What's going on?" No greeting, no context, just urgency. "It's inactive," I responded. 3 dots. "Why would you do that?" "I need to drive across town. Gas prices are insane right now." The phrasing was familiar. External conditions as justification. As if inflation automatically reassigned responsibility to me. "You can still purchase gas," I wrote, "just not with my account." He sent a longer message this time. "You're really turning your back on family cooperation over a misunderstanding." Cooperation. I felt something settle in my chest, not anger, just clarity. "Does cooperation mean one person pays?" I asked. He didn't answer the question. Instead, he wrote, "This is dramatic." I didn't respond. Silence can be more educational than a paragraph. By evening, Dad called. He didn't open with confusion. He opened with accusation. "What exactly are you doing?" he asked. His voice already elevated. "Your mother was humiliated at a grocery store." "I changed access on my accounts," I said evenly. "You're humiliating your own parents over money." The word humiliation again. As if the decline screen was an attack I personally staged. "Using your own funds isn't humiliation," I replied. "It's adulthood." He exhaled sharply. "Other children would be proud to support the people who raised them," he said. "You think this looks good?" I didn't take the bait. Choosing not to fund someone else's expenses isn't an insult. He shifted tactics. "Do you enjoy watching us struggle for pennies?" I leaned back in my chair. "Paying with your own debit card is not struggling." He paused, then tried a softer angle. "If the roles were reversed, I would never deny you." I thought about that. Carefully. "When was the last time you supported someone without expecting access in return?" I asked. Silence. Then frustration tightening his breathing. "Just reactivate the cards," he said. "We'll sort this out later." "No," I said. "There won't be a restoration." He ended the call abruptly. Later that night, my mother texted a paragraph. A daughter has a moral obligation to secure her parents' comfort. The world sees parental care as sacred. I don't understand why you're poisoning our bond over finances. I read it slowly. The language was deliberate. Sacred, moral, bond. Financial support is a choice, I wrote back, not a law. You're being selfish, she replied almost instantly. Self-respect isn't selfish, I answered. Kyle tried again the next morning. Let's call it a misunderstanding, he wrote. Just restore my card until I figure things out. This doesn't have to be permanent. He didn't mention gas prices this time, or cooperation, just convenience. There will be no restoration, I replied. A pause. You're being dramatic, he sent again. Maybe, but dramatic doesn't invalidate correct. That weekend, the consequences expanded beyond groceries and gas. My phone remained quiet until Saturday afternoon when Dad called twice in a row. I let the first call expire. The voicemail that followed was measured. I need clarification, he said. This situation isn't sustainable. He didn't specify what wasn't sustainable. The bills or the loss of access. When I called him back, his tone was controlled, almost formal. You've made your point, he said. Now reverse it. It's not a point, I answered. It's an account structure. He scoffed at that. You think you can treat your parents like a financial spreadsheet? I thought about my kitchen table, my laptop, the methodical clicks. I treat liabilities like liabilities, I said, calmly, regardless of who they belong to. He shifted again. Your mother's blood pressure has been high all week. There it was. Health. I hope she schedules an appointment, I replied. With what insurance, he snapped. She's eligible for subsidized programs, I said. She can apply. A long silence. You're cold, he muttered. No, I wasn't cold. I was consistent. By Monday, the phone disruptions began. The family plan had been dismantled. Each line now required its own contract. Promotional pricing vanished. The bill recalculated. Mom texted first. They're saying I need to sign something and do a credit check. This is ridiculous. We already had a plan. You were on my plan, I wrote. Now you'll have your own. The new price is higher, she said. It was always that price, I replied. I just absorbed it. Dad called later that evening. Loyalty should count for something, he said. With a telecommunications company, I asked. He didn't appreciate the question. Throughout all of it, I didn't raise my voice. I didn't list grievances. I didn't recount years of payments. I answered each accusation with the same calm tone I use when a client questions underwriting decisions. They rotated strategies, guilt, embarrassment, moral language, tradition. But the market is indifferent to emotion. A card declines, or it doesn't. A payment clears, or it fails. What unsettled them wasn't poverty. It was exposure. For years, they had interacted with prices without seeing cost. They used services without feeling the debit. Now every transaction required their own name, and the silence between each call grew heavier, not because I was punishing them, but because for the first time the numbers were visible. The first wave was about groceries and gas. The second wave was about control. Dad called during my lunch break one afternoon, and this time, he didn't open with accusation. He opened with strategy. If you're refusing to discuss family responsibility privately, he said, his tone measured. I can always bring this to your supervisors. I'm sure they'd be interested in the kind of daughter they've hired. I actually thought I'd misheard him. My supervisors, I repeated. Yes, he said. Ethics apply everywhere. A company should know whether their employee understands loyalty. There it was, the shift. He wasn't arguing about a declined card anymore. He was reaching for leverage. I felt something settle in me, not fear, not anger, just clarity. My workplace evaluates financial integrity and professional compliance, I said calmly. They don't evaluate how much money I give to my parents. You're dismissing heritage, he replied sharply. Family reputation matters. Heritage isn't collateral, I said, and contacting my employer to demand access to my income would look closer to harassment than dignity. He didn't like that word, harassment. I'm protecting our family's dignity, he insisted. Threatening someone's employment to pressure them into financial support isn't protection, I said. It's intimidation. He objected immediately. Don't twist this. I'm your father, and I'm an adult, I answered. Adulthood includes managing your own liabilities. There was a pause. I could hear his breathing tighten again. You think you earned that job on merit alone? He said suddenly. Positions like yours don't just appear. I could ask questions. It was subtle, but it was there. Questioning my credentials, suggesting favoritism, undermining the very thing he'd once praised when my salary funded their expenses. Professional advancement is audited, I replied. If you contact my employer to question it, because I won't reinstate your credit access, that will be documented. He scoffed, but the edge had dulled. You'd involve legal language and a domestic disagreement. A boundary doesn't stop being valid because it's family, I said, and the law protects employees from interference that jeopardizes their job. He went quiet after that, not convinced, just recalculating. Mom tried a different route. She called in the evening, her voice softer than usual. My blood pressure has been high all week, she said. Do you want to see your mother's health decline over money? Health. Again. I want you to enroll in the insurance program you qualify for, I said gently. The application exists for a reason. It's overwhelming, she insisted. Forms, deadlines. A daughter should handle that kind of complexity. Tens of thousands of adults complete those forms every year, I replied. It's not designed for daughters. It's designed for applicants. She sighed, a long exhale meant to carry weight. So you believe I deserve discomfort? Discomfort and responsibility aren't the same, I said. Applying for your own coverage isn't punishment. Her tone shifted slightly. A moral daughter ensures her parents' comfort. A moral adult manages their own obligations, I answered. Kyle, meanwhile, adjusted his language, but not his position. He called one afternoon, sounding almost cheerful. Families rely on each other when things get hard, he began. Unity is permanent. Inconvenience is temporary. It was polished, practiced. You could make this easier, he continued. Why create stress when you have the resources to remove it? Employment also removes stress, I said. What's preventing you from applying for positions in your field? I prefer autonomy, he replied quickly. Financial autonomy requires income, I said. He laughed lightly as if I'd missed the point. You're focusing on technicalities. We're talking about staying connected. Connection doesn't require shared credit, I said. It requires mutual effort. He tried once more. You're turning independence into isolation. No, I answered. I'm turning dependency into accountability. Each of them use different language, heritage, morality, unity, but the pattern was identical. They framed my boundary as betrayal, as cruelty, as ego. And every time I brought the conversation back to structure, a declined card isn't humiliation, a separate phone contract isn't abandonment, an insurance application isn't rejection. They wanted the language to stay emotional because emotion is flexible. Structure isn't. Dad called again a few days later, his tone sharper this time. "You've forgotten gratitude," he said. "Ambition corrupts judgment." "Withholding financial sponsorship doesn't erase gratitude," I replied. "It just clarifies responsibility." "You're morally defective if you refuse your parents," he snapped. "Moral language doesn't change. Underwriting," I said evenly. "Bills still belong to the person who incurs them." There was a long silence after that. For the first time, he didn't escalate. He didn't threaten. He didn't accuse. He just ended the call, and then something unexpected happened. The chaos slowed. The angry calls turned into shorter messages. The dramatic language softened into questions disguised as updates. Instead of outrage, there was friction. Instead of pressure, there was calculation. The quiet that followed wasn't peaceful. It was the sound of new bills arriving, of unfamiliar forms being opened, of costs landing where they had always belonged. No one apologized. No one admitted manipulation, but the volume dropped. And in that quieter space, the difference became clear. Intimidation tries to control outcomes. Responsibility adjusts to them. I wasn't raising my voice anymore. I didn't need to. The system was speaking for itself. The consequences did not explode all at once. They unfolded methodically, like notices arriving in sequence. By Monday morning, her mother's insurance portal displayed a quiet but unmistakable message. Coverage terminated at the end of the billing cycle. Kathleen had removed herself as the primary policyholder and separated the accounts exactly as the contract allowed. There had been no cancellation penalty, no dramatic confrontation, just a clean administrative correction. Her mother called her mid-morning. "I tried to refill my prescription," she said, voice trembling. "They said I'm not active anymore. There must be some mistake." "There isn't," Kathleen replied evenly. "The policy was tied to my employment. I separated it. You can enroll through the marketplace. There's open enrollment right now." A pause. "But that's expensive." "It's priced according to income," Kathleen said. "You'll qualify for subsidies." Her mother inhaled sharply as if that information were somehow accusatory. "I can't believe you'd let it get this far." Kathleen didn't argue. She understood systems. Insurance companies did not operate on sentiment. If premiums were not structured correctly, if ownership shifted, if responsibility changed, policies adjusted. No malice, no negotiation, just compliance. By Tuesday, her father discovered that his auto loan refinancing application had been denied. He had grown accustomed to Kathleen co-signing documents attaching her credit history like a stabilizing weight. Without her name, the numbers recalculated. Debt-to-income ratio too high. Credit utilization excessive. Insufficient independent income stability. He came into the kitchen holding the rejection letter like an accusation. "They refused," he said. "After 25 years of loyalty to that bank." "Banks don't factor loyalty," Kathleen replied calmly. "They assess risk." He bristled. "You're making it sound like I'm irresponsible." "I'm saying they evaluate data." The car loan was now adjustable at a higher interest rate. Without refinancing, the monthly payment would rise within 2 months. Selling the vehicle was an option, downsizing was an option. But options required decision-making, not indignation. By Wednesday, Kyle encountered his own version of reality. He had applied for a new credit card after discovering that the shared emergency card under Kathleen's primary account no longer authorized transactions. The denial came within minutes. No credit history, the email read. Limited independent income. He stormed into her room with his phone in hand. They won't approve me because I don't have history, he said. You know why I don't have history? Because we've always used yours. That's exactly why Kathleen said. That makes no sense. It makes perfect sense, she replied. Credit builds when you carry it yourself. He stared at her like she had personally rewritten the banking system. It's not my fault, he said. We've always done it this way. Yes, she said quietly. We have. By Thursday, the phone bill increased. The family plan discount had disappeared once Kathleen transferred her line to an individual account. Bulk pricing required a primary holder with a certain credit tier. Without it, each line cost more. Her mother mentioned it at dinner. Our bill went up almost 40%. That's how tiered plans work, Kathleen said. The discount was attached to my account. You could at least have warned us. I did, she answered. When I said I was separating finances, they had heard the words. They just hadn't believed the systems would follow through. Housing complications surfaced next. The lease renewal paperwork required income verification from all adult residents. Previously, Kathleen's salary had met the threshold. Now that she had formally removed herself from the guarantor section and submitted updated residency information, the landlord requested proof of independent qualification. The email was clinical. Please provide documentation showing sufficient income or secure an alternative guarantor within 10 business days. No judgment, no commentary, just policy. Her father read the message twice. They can't do that. They can, Kathleen said. It's standard. So what, we're unstable now? No, she said evenly. We're being evaluated without my income attached. There was a silence after that one that felt heavier than the arguments from the week before. Every institution behaved the same way. The bank did not consider pride. The insurer did not consider maternal guilt. The credit bureau did not consider brotherly accusations about unity. The landlord did not consider heritage or dignity. They responded to documentation, to ownership, to liability. By Friday evening, the house felt different. Not louder, not angrier, just unsettled. Her mother sat at the dining table with brochures from the health insurance marketplace spread in front of her. For the first time, she was calculating premiums herself, comparing deductibles, reading fine print. Her father spent an hour researching used car resale values. Kyle watched videos about building credit scores. No one thanked Kathleen. No one apologized. But something fundamental had shifted. She sat in her room reviewing her updated financial dashboard. All accounts were singular, clean, transparent, no joint obligations, no secondary users, no automatic extensions of her credit line. Her risk exposure had dropped significantly. She felt no surge of triumph, only clarity. For years, she had believed that removing support would equal harm, that stepping back would be cruelty. But watching the week unfold, she saw something different. Nothing catastrophic had happened. No one had been destroyed. Systems had simply recalibrated to reality. She wasn't punishing them. She wasn't sabotaging them. She had stepped aside, and the world, banks, insurers, landlords, had resumed their neutral mechanical function. Responsibility had weight. It always had. It had just been resting on her shoulders alone. Now it was distributed according to ownership. The house was quieter that night. Not peaceful exactly, but stripped of illusion. Kathleen closed her laptop and turned off the light. For the first time in a long while, the numbers in her life reflected only her. They were waiting for her across the street when she stepped out of the office building. Not inside the lobby, not seated calmly in the cafe next door. They stood near the curb like an intervention, her mother clutching a folder, her father, rigid and unsmiling Kyle, pacing in short, impatient circles. Kathleen adjusted the strap of her bag and crossed toward them without changing her pace. "What's going on?" she asked, voice even. Her mother lifted the folder as if presenting evidence. "We found a place," she said quickly. "A smaller apartment. It's reasonable, but they need a guarantor." Her father cut in. "Just temporary, until I get back on my feet." Kyle stopped pacing. "It's standard, Kathleen. Families do this for each other." She glanced at the leasing brochure in her mother's hands. Income threshold, circled in pen. Guarantor requirement highlighted. "Have you applied independently?" she asked. They ran the numbers, her father said tightly. "They want additional security, which means they assess the risk," Kathleen replied. Her father's jaw tightened. "Don't talk to me like I'm a file on your desk." "I'm not," she said. "I'm explaining how the landlord sees it." Her mother stepped closer. "We're already embarrassed enough. The agent looked at us like we couldn't afford our own lives. Do you know how humiliating that feels?" Kathleen met her eyes. "I do." "Then fix it," her mother said softly. "You can fix it with one signature." Kyle exhaled sharply. "Why are you acting like we're strangers asking for a loan? We're your family. This is about unity." "Unity!" The word hovered in the air like a moral verdict. "It's about liability," Kathleen said calmly. Her father scoffed. "There you go again. Legal terms. Technicalities." "They're not technicalities," she replied. "If I co-sign, I am legally responsible for the full lease. If rent is missed, it hits my credit. If there's damage, I'm liable. If you break the lease, I'm responsible for the remainder." "We wouldn't do that," Kyle said quickly. "I'm not questioning intent," Kathleen said. "I'm acknowledging risk." Her father's voice rose. "So you think we're a risk now?" "I think the landlord does," she answered evenly. "That's why they're asking for a guarantor." Silence fell for a moment, heavy and strained. Her mother lowered her voice, shifting tone. "After everything we've been through, you're going to let paperwork stand between us." "It's not paperwork," Kathleen said. "It's a binding contract." Her father stepped closer. "You know what this looks like. It looks like you're ashamed of us." "I'm not ashamed," she said. "I'm careful." Kyle shook his head. "Careful or selfish?" Kathleen didn't flinch. "If I attach my credit to this lease, I limit my own borrowing capacity. That affects my mortgage options, my professional standing, future applications. It's not symbolic, it's measurable." "So that's it," her father demanded. "Your future over your family." "My future is my responsibility," she said quietly. "Yours is yours." Her mother's eyes filled, but her voice sharpened. "Families help each other." "They do," Kathleen agreed, "within their capacity. Not by hiding legal exposure or pretending risk doesn't exist." Kyle gestured toward the building behind her. "You work in risk management. You can navigate this. You know how to structure it. I know how to evaluate it," she corrected. "And the evaluation says no." Her father let out a humorless laugh. "You won't even consider it." "I have considered it," she said. "Extensively." They stood there, the traffic noise filling the gap where persuasion used to work. Her mother tried once more. At least sign privately. We don't have to make it a big thing. Just between us. Kathleen shook her head. I don't do financial agreements privately anymore, she said. If there's a request, it needs to be documented. Email, terms in writing, full disclosure. Her father stared at her. You need a paper trail for your own parents. I need clarity, she replied, and accountability. Kyle folded his arms. So, what we send you a formal proposal now? Yes, Kathleen said. If you're asking me to assume legal liability, it deserves formal communication. Her mother looked stunned. That's cold. It's structured, Kathleen answered. Another silence. Cars passed. Office workers filtered by, unaware of the negotiation unraveling at the curb. I'm not signing, Kathleen said finally. And I won't discuss it in parking lots or over phone calls. If you have future financial requests, send them through documented email. I will review them and respond in writing. Her father's expression hardened into something resigned and bitter. So that's how it's gonna be. Yes, she said. She adjusted her bag again, not rushed, not angry, just clear. Then she turned and walked back toward the building, leaving the folder unopened and the rule firmly established. The move happened in stages. First, there was the short-term rental of furnished unit on the edge of town, paid week to week. It wasn't spacious, and it certainly wasn't comfortable, but it was manageable. The landlord required a deposit and proof of current income. No guarantor, no exceptions. Her father signed the documents himself. Kathleen didn't help negotiate it. She didn't review the lease. She didn't calculate the numbers. She simply stayed out of it. Her parents packed what they could fit into a borrowed truck. The rest went into storage or was quietly sold online. There were no dramatic speeches about hardship, no public acknowledgments of how they'd arrived there. Just logistics, just movement. For the first time in years, Kathleen's name was not attached to any of it. A few weeks later, her father found work again. Not the same position he'd held for decades. Not the same salary or title, but steady, structured, predictable. He left early in the mornings and came home tired in a way that was different from before. There was less talk of what he deserved and more talk of what needed to be done. Her mother completed her own insurance enrollment through the marketplace. It took 3 phone calls and an afternoon of paperwork. She complained about the deductible at first. She worried aloud about coverage gaps, but she read the documents. She chose a plan. She paid the premium from her own account. There was something almost startling about how normal it all became. Kyle took longer. He resisted at first, bouncing between short-term gigs and complaints about unfair wages. But rent had a due date. Utilities had due dates. The temporary lodging didn't allow extensions based on frustration. Eventually, he accepted a warehouse job, entry-level low-pay early shifts. He grumbled the first month. By the second, he started talking about overtime hours. By the third, he had opened a secured credit card in his own name. It was small, $500, but it was his. There were no family meetings about growth, no tearful acknowledgments of lessons learned. Responsibility didn't arrive with a speech. It arrived with invoices. Over time, the temporary rental gave way to a smaller apartment. 2 bedrooms instead of 3. No garage, no extra storage. The building required proof of income for each adult occupant. They qualified. This time, no one asked Kathleen to sign. The distance between them shifted quietly. Phone calls became less frequent and more practical. Her mother updated her on appointments without dramatizing them. Her father mentioned work schedules instead of grievances. Kyle occasionally asked technical questions about credit scores, but didn't ask her to attach her name to anything. There was no apology, but there was less entitlement. Kathleen noticed something else too. Without the constant negotiations over money, conversations felt shorter but cleaner. There were fewer undercurrents, fewer emotional hooks disguised as emergencies. Financial distance had created relational distance, but not the explosive kind, not estrangement. More like a recalibration of proximity. They no longer operated as a single financial unit. And without that tether, the emotional intensity softened. For Kathleen, the change was internal as much as external. Her career sharpened. With her risk exposure reduced, she qualified for projects that required stricter financial disclosures. She pursued a certification she had postponed for years because she'd always been managing someone else's crisis. She stayed late at the office because she wanted to, not because she was bracing for another emergency call. Her savings grew. Her credit profile strengthened. But more than that, her thinking changed. She realized she had spent years equating support with love and obligation with virtue. When she stepped back, she expected resentment to consume her. Instead, something quieter replaced it. Relief, not triumph, not revenge, just relief. She watched her family adapt, not perfectly, not gracefully, but competently. They survived without her signature underwriting every decision, and that survival shifted something fundamental inside her. They were not helpless. They had simply been comfortable. Independence did not destroy them. It required them. Months passed without dramatic reconciliation scenes. There were no speeches about newfound respect, but there was a subtle dignity in the way her father talked about his paycheck, a cautious pride in the way Kyle mentioned his improving credit score, a steadiness in her mother's tone when discussing her insurance renewal. Life had narrowed for them, but it had stabilized. For Kathleen, clarity replaced resentment. Structure replaced chaos. She no longer felt like the invisible guarantor of everyone's future. She was simply herself, financially separate, emotionally steadier, professionally focused. And in that separation, something unexpected happened. Everyone learned how to stand. Sometimes what feels like distance is actually design. Financial boundaries aren't acts of cruelty, they're frameworks that clarify responsibility. When structure replaces assumption, relationships change. Not always dramatically, just honestly. If you've ever had to separate love from liability, you understand how quiet that shift can be. Share your experience if you'd like. How did independence reshape your relationships? However it unfolds, clarity has a way of settling where chaos once lived.